Good morning, my people. The day is finally here. We've got the Fed rate announcement happening in T minus about an hour, a little bit less than an hour. So let's be ready. Let's sit back and watch. All right, guys, we're live here sitting on Instagram, Facebook, YouTube, and LinkedIn, all getting ready to watch. Here in about the next hour or so, the Fed rate announcement, the very first since March of 2020. So big deal for the markets, big deal for moving forward here in 2024 and what's to come in 2025. Come join us. We look forward to seeing you. Just a quick little story post for socials. All right, if you're here, say hey and let us know what you think the Fed will do. Are we going to see 25 basis points today or 50 basis points in rate cut? The Bank of England not cutting tomorrow, and the Bank of Japan is hiking. Kind of crazy how we're all in like different stages of our economy, although facing the same challenges pretty much across the world. Interesting. Guys, what's going on? If you are here, let me know in chat what you think. Are we going to see 25 basis points or 50 basis points coming from the Fed, Mr. Jerome Powell, this afternoon here in the next about hour or so? What do you guys think? What do you think? I'm in the 50 basis point camp only because I feel like they do want to get ahead of anything that's going to make them look really bad if they only do 25, right? So 50 is definitely going to signal that there is some deterioration in our economy, which obviously we already know. Labor markets are seeing lots of layoffs currently, which again, as we push into the end of the year in the fall and winter seasons, you naturally see more layoffs, unfortunately. And as that continues to speed up, right, you don't want other things, other barriers of entry to stop us from getting to that next stage in our economic cycle. I think it's gonna be 50, but it'll most likely end up being 25 'cause, again, Jerome Powell and the Fed are always playing it safe, but that's fine. Yes, 50. Let's see 50. Nah. I feel like the consumer is continually weakening right now in the economy and just adding and piling on more debt, which we've seen through data and analytics. And honestly, there's got to be, it's going to come to a head here eventually with consumer debt at an all-time high. Credit cards, student loans, auto loans at absolute dismal interest rates and pay monthly payments, right? So, like, as your mortgage, professional and expert, we see a lot of this stuff from the back end, right, with consumer debts, consumer liabilities, things like that, and it is not pretty right now. It'll be a shame if we just move too slow and then push ourselves into a recession, though. That would be unfortunate. And realistically, too, the worst part about all of that is as we, if we end up in a recession or the economy does end up coming to, another grinding halt, the only real people that are going to suffer are, of course, your middle class people, lower middle class people, your just people that really need it the most. Those are the ones that always suffer the most. So let's hope that does not happen. 50. Armando says 50. I honestly think it's gonna be 50 as well. 50 basis points, I feel like is gonna be the solid, healthy, we should to be honest with you, I think we should have cut in July. I feel like a lot of the economists predicted that or, had hoped that we had cut at least 25 basis points in July to kind of front load and get ahead of a lot of the uncertainty. So being that we did not do 25 in July and now we're here in September, right? 50 makes sense, especially with a lot of the most recent economic data that we've seen in these last few weeks with CPI, jobs, etc. We do not want to go into the end of the year here. We do not want to get into the fall and winter seasons behind the curve. Okay, we want to try to stay ahead of this thing. And I feel like 50 basis points is going to give the push that the consumer needs to stay healthy. Thoughts? What do we think? What do we think of my analysis, y'all? Junior economist. Junior economist. Well, we have a healthy amount of you guys in here, 17 of you in here currently. Tell me, what do you think? 25 basis points, 50 basis points? What are we going to see today and why? Ray, what's going on, my guy? Welcome. I appreciate you joining, coming to support your boy, hearing my expertise analysis. You know what I mean? Junior economist extraordinaire. Great. Also, are we gymming today, tomorrow, by the end of the week? When's our next gym session, sir? 24, you guys popping in right now ahead of the Fed rate announcement to see what's going on and hang out with your boy. Welcome. Let me know in chat, guys. 25 basis points, 50 basis points. What are we going to see and why? Yeah, baby. Another 100 basis points in 2025. I honestly think we're going to see a little bit more in 2025. Nice. Let's just hope that we keep the 10-year yield pushing downwards. That's the main thing that we wanna see in real estate and the mortgage industry is that 10-year yield pushing down, okay? 10-year yield is what tracks mortgage interest rates and what mortgage interest rates are tied to, not directly the Fed rate, Fed rate cuts or Fed rate short-term Fed funds rate. We are tied to, in the mortgage and real estate world, is 10-year treasury yield. So we need to see that yield push down, right? That way mortgage interest rates continue to fall. We're in a downward trending market right now with interest rates, but if that 10-year yield starts pushing up again, that's when we're gonna see rates remain stagnant or even increasing. Just this last 24 to 48 hours, rates have pushed up just a bit because 10-year yields have pushed up a bit. So that's another super important part to those of you that are in here as more of a consumer watching, right? Someone looking to buy a house, someone trying to refinance, someone trying to do something with their real estate, okay? That's the part that you need to focus on is the 10-year yield. 50, yes. I think 50 personally. Nat, are you saying 50 question mark, why would it be 50 or 50 that's what you think and what about everyone else? What's the general consensus? Also, guys, don't judge me for my Taylor Swift cup. There was no cut yet, Nat. We don't have the announcement quite just yet. It's gonna be here before noon. I think 11:30 is when they start. Or no, noon is when they start, so we'll see the official announcement at, noon, I believe. So at noon, they're gonna roll out the official announcement. At 12:30, we're gonna have the actual press conference that's gonna go through what's called the dot plot and kind of forward guidance with where we should be here for future cuts in November, December, and then pushing into 2025. That's the most important part of today, guys. It's not necessarily what the immediate cut's gonna be today. We already know it's either gonna be 25 or 50 basis points. If it's 50 basis points, that's fantastic. We'll see some immediate, faster cool down relief to things like auto loans, home equity lines of credit, things like that. But it's the dovishness and it's the forward guidance that we want to really, really hone in on for future Fed meetings and for what's going to happen in 2025. Remember, specifically, the real estate market is always predicated on forward looking guidance. Okay. That's why mortgage interest rates, again, we're not tied directly to the federal short term Fed funds rate. We're tied to the 10-year yield, and the 10-year yield will move based on forward-looking guidance and projected guidance on what's going to happen in the future, okay? So you see there how much the actual 10-year yield has pushed up in just this last day. Cut 50, yes, I would agree with you. I am on the cut 50 camp. I am gonna go ahead and shoot the 3 for 50 BP, okay? I'm sure it's gonna be 25 though. The Federal Reserve, Jerome Powell, they tend to take this super, super tight, careful approach to the economy, which has, not been terrible thus far, right? It appears that we're gonna get this soft landing that, coming out of the pandemic and, what everyone thought was gonna push us immediately into a recession where, to be honest with you, there's been a lot of economic data this last couple of years that we were in and out of a recession pretty much the entire time. However, I would love to see them again push for 50, give us 50, front load this thing, get ahead of it. That way we don't nip ourselves in the butt moving forward. You know what I mean? Oh, wait, they did lower it to 50. There we go. We just got the announcement. You see right there? Fed lowers benchmark. Boom. We called it, guys. We called 50. We called 50. Let's go. Let's get a round of applause in chat. We cut 50. Fed sees rates at 4.4 at the end of 2024. Okay. 3.4 in the end at the end of 2025. That would mean essentially from right before they could just cut right now at 50 basis points, right? We were at like right around 5.5% Fed funds rate. If we're gonna get to 3.4 by the end of 2025, that means we're gonna get over 200 basis points in cuts. Now we just got 50, okay? That would mean we need another 150 basis points, right? So they're expecting then November and December to both be 25 basis points, and then in 2025, we're gonna get 100 basis points through the year. So pretty solid. Wow, 50 basis points, guys. I cannot believe honestly, I thought it was gonna be 25. I was very, very confident that it was gonna be 25. Don't no, they did not think that. With this, awesome announcement, where do you see mortgage rates going to by the end of the year? So again, guys, let me just reiterate, this is super duper important, and this is a part of, you know, I can understand how confusing this is from a consumer standpoint where you see, rate cuts happening, right, in the short-term Fed funds rate, and we automatically assume that that's going to directly correlate to mortgage interest rates. Now, it's not. When you see here in just a minute, when they put the 10-year yield on the screen, okay, you're gonna see this is the 30-year yield, we don't care about that necessarily. When they put the 10-year yield, that is the benchmark that mortgage interest rates follow. As you see the 10-year yield push down, okay, you see right here where the 10-year yield is actually going up. It's a red arrow going up. That's not good. We want that green arrow going down, okay? Because mortgage interest rates are tied to the 10-year yield. As the 10-year yield pushes down, which earlier this year, the 10-year yield was actually in the mid 4% range, okay? You can see there it's at 3.6% or so, which is why interest rates have come down so much in this last 30 to 45 days, okay? But as the 10-year oh, there we go. It's already pushing down quite a bit. So decent, nice, love it, love to see it. This is the chart that matters, guys. We need the 10-year yield pushing down, we need it trending down, and we need it coming down over a period of time. As long as we see that, as we see the 10-year yield coming to 3.5, 3.4, 3.3, that's when you're going to Nat, they actually just announced it. So we got 50 basis points. They just announced the rollout of 50 basis points now. But anyways, as you see that 10-year yield pushing down is when you're gonna start seeing mortgage interest rates continue to trend downward. So I expect, mortgage interest rates through the end of this year to remain similar to where they are right now. So, yeah, you're super welcome, Nat. Congrats, right? 50 basis points is pretty solid. You're gonna see interest rates kind of hold steady, I feel like, in the high 5% range for conventional loans. You're gonna see the mid 5% range for government loans, that's FHA and VA. And then as we push into 2025 is I feel like when you're gonna start seeing conventional interest rates push down to the mid to lower 5s potentially, and then the government loans, your FHAs and VAs start pushing more into the high 4% or low 5% range. So, there's a lot of room for improvement, but these things happen very slowly, guys. Remember, the the upside, which is good, meaning rates coming down, happens very slowly. The negative, the inverse, right? The downside to it with rates going up happens very quickly, right? Because the markets want to protect themselves and, kind of hedge against any negativity. So rates deteriorating happens extremely fast. Rates improving will happen very slowly over periods of time. Does that make sense? Also, too, let me know how's the volume on your guys' end? Can you guys hear the channel? Big deal. That's what directly affects us. Yeah, big dog, I got you. Yeah, Ray, you have no idea. I've got so many calls booked today to explain these concepts to people that are clients of mine that are in the process of buying, they're pre-approved with pre-approvals in hand. They are, actively shopping. They're setting up for pre-approval here in the coming months. All of these people are directly tied to kind of these decisions with the Fed and how that affects them. When realistically, the actual decisions with the Fed are not going to affect things immediately for those people buying right now, but for those buying in the next quarter or next year, that's when the forward guidance will affect those consumers, right? So a lot of talks, right, where it's kind of like the, marry the house, date the rate, buy now before all the people come into the market and make home prices more expensive. There's a lot of validity to that, right? Because you have to remember once you own that home, once you're the homeowner, okay, you're essentially locking in and guaranteeing for the next 30 years what your interest rate and principal and interest payment is until you decide to refinance, right? So you lock it in fixed rate for the next 30 years. There is no downside. It's guaranteed. Unless, okay, interest rates come down enough to make a mortgage refinance beneficial for you, okay? In the event that that refinance is beneficial to you, then you can make a financial event, right, through refinancing or, rate and term refinance, streamline refinance, what have you, to then lower the rate and the mortgage payment, right? Because you're already the homeowner, you have the house. Now it's just a matter of us improving, refinancing, making more affordable, so on and so forth. So get in the house, guys. Get in the house. Stop waiting for the intangibles in the market and what's going to happen because all you're doing is making that purchase more expensive for yourself. Okay. Home prices are not coming down. They're just not. Oh, my landscapers here. Hopefully, you guys can't hear them in the background outside. Employment and jobs data has been soft, guys, and it's going to be getting worse here as we push into the end of the year. Not, not good. That deficit, man, $7 trillion deficit, we definitely have to keep a close eye on too. In about 15 minutes, guys, I think they're gonna start getting ready for the Fed press conference with Jerome Powell. I know definitely by noon we're gonna happen, so next 30 or so minutes, I feel like. Which I'll be sitting tight with you guys. I do wanna watch it through with you guys live on the feed. That way, if there's, some questions or things that we wanna talk about together, we can kinda dig in, but we'll be here. 50 basis points, guys. I am actually in shock that we got 50 basis points. Insane. We got it. Not really. We have all the data that says things are a little soft, so we need to front load it. Come on. All right, we're not getting back-to-back 50s, y'all. I guarantee that. Come on, 10-year yield, come down. That's what we wanna see declining for mortgage interest rates. Wait, hold on a sec. Let me see if I can how do I add on here? Can I add text on the overlay? So crazy, guys. The average interest rate on a credit card is 25%. Let that sink in, y'all. Like, what is actually happening with the car market right now? I've heard so much back and forth with, like, the inventory in the auto sector just exploding and inventory being there's such a surplus of inventory. Like, I wonder what's going on there. Yeah, we should have honestly had 25 basis points in July, which is what would have kind of sped this thing up a little bit and got us ahead of the game even more, but I feel like 50 basis points really gets us back in the game, y'all. Really looking forward to seeing this, Fed Reserve meeting, FOMC meeting, guys, here in just a little bit, so let's stay tuned for that. Mr. Jerome Powell better have his A game on, y'all. So if you're here in the chat too, let me know, are you either in the industry, or you're a real estate agent or a mortgage broker, or are you a consumer that's in the market right now trying to buy a house, trying to refinance a house? You bought a house in the last year or 2, you have not yet refinanced. Tell me, who do we have here that's waiting, watching, learning, and anticipating kind of what's gonna be happening here through the end of the year? Come on, 10-year yield, guys. Remember, this is the part that matters for mortgage interest rates. We want to see that 10-year yield pushing down, coming down below that 3.6 level. We wanna see 3.5, 3.4, 3.3 ideally. The more that that 10-year yield pushes down, the better you're gonna see mortgage rates improve, okay? That's the part you need to focus on and know. I wonder if I should move this up. Wait, whoop, my bad, guys. Hold on a second. Sorry about that. Alright, come on, 10-year yield, push down, let's go. I think that's the part too, as we see mortgage interest rates continue to push down, that's gonna be the toughest for first-time homebuyers, young families, those that really don't have a ton of resources on their end to, right, go above asking price as the market picks up and, picks up speed. Those that are, not able to waive contingencies, things like that. So, more the reason to have urgency, right, for your first-time home buyer or buyer that has an immediate need, right? Their, lease is ending, whatever, that we wanna see you guys get into the market now, get into the house now, make yourself a homeowner now, and then let's capture the improvement and the decrease in rates with your, mortgage refinance for next year. That's quite a delta right there. 0 and 20%. We got 50 basis points, y'all. Looks like the markets are liking this 50 basis point too. Yes, we want dovish. We got the 50. We're gonna see 225s before the end of the year. It's a 100 basis point move before 2025, guys, and I think that was the move. So you guys, I have clients of mine right now texting me, "Hey, Mario, how does this affect my mortgage? Hey, Mario, what does this mean for me as a first-time home buyer kinda going into next year? Hey, Ma" like, this is big news, guys, you know what I mean? So you need to be informed and educated what it exactly means for your situation. Don't jinx us. Making it up as they go. I think that they're reliant on the data. I don't think they're making anything up. Yep, the market loves this, so Mr. Powell is about to approach the bench, y'all. Let's get ready. We wanna see a very dovish, positive, enthusiastic Chairman Powell. We wanna see optimism heading into the end of the year. We wanna see optimism into 2025. Let's go! Here we go, y'all. Shh, shh, shh. Yes, sir. Yes. Love it. Ooh, ooh. Beautiful. Anemic face, I love that. – 2% would be pretty solid. Yeah, that's not good. Eh, pretty close. Sure did. Boy, have we felt it at the grocery store, y'all. I love that they're front loading this. Okay. Case by case, baby. Okay. Share that. Big time, guys. That's 200 basis points by the end of next year. Come on. Got them guns loaded. They're locked and loaded. Okay. Greatly, actually. Here we go. Questions, y'all. Let's dig in. 50 basis points. We always get revisions down, I feel like, at least lately. Gold is liking the news. Market's loving it. Look at that. Case by case. All right, guys, remember, we wanna see the 10-year yield coming down. We need the 10-year yield coming down, not going up. I wanna see that 10-year yield somewhere around 3.3, 3.4 by the end of the month, if possible, please. course, they're certainly restrictive now. We need to loosen up. Was dog, not good. Love it. Having to teeter and balance these things, guys, imagine. You have the balance of the country in your hand, the livelihood of millions and millions of families. Say more in favor of 50, please. This is an important comment here, guys. Broad support for the decision the committee voted on. Hmm. Broad support. It's a pretty decent consensus as far as getting these rates down. 50. They gave us 50 basis points, y'all. Trying to deflect a little bit to not give too much forward guidance into what's gonna happen in November or December, but I do feel like the optimism and the desire to cut is there based on these comments. We don't like unemployment. We don't want unemployment. Hmm, I don't know about that. That's a big statement, guys. Wow. Strong. Strong statement. Yes. Yes, that's what I'm talking about. It's a little wonky of a question. Yep, they waited this thing out big time. Interesting. Abundant. Love it. Labor market is definitely one of the main things that they're keeping the closest eye on because it seems to be not heading in the right direction. An economy that's still growing. Love it. Dang, United States dollar versus Japanese yen, 141. Oof. They definitely feel like they're ahead of uh, the labor situation. Oh, good question. Oh, a little feisty comment. Sustainability, guys. That's the key word here for the, Fed chair. It's sustainability. They love the dual mandate. Yeah, let's dig in. Drill down a little bit. Let's hope it stays there. He sounds very confident about the labor market and all of those different variables. So that's really, really good for us getting, again, the continued ongoing easing of policy, restrictive policy. Oh, that's gonna be a big week right there, getting jobs data right before the next Friday before the next meeting in November. Stock market's really liking this announcement, guys. Great to see green today. A 10-year yield is what we wanna keep an eye on, guys, for mortgage interest rates as we see it push down is what is going to see the decrease in cooling and trending in mortgage interest rates. 10-year yield. Oh, boy. Calm down, Debbie Downer. Which is probably a good thing. It's okay. Sustainability. Oh, boy. Flex on them. Salute. Yes. Agreed. Fifty 50 basis points is not unusually large. Love it. Love it. Love it. Mm. Okay. Love it. Carefully spoken. I wouldn't say so yet. Boom. Job not done yet. Which is why they're maintaining this careful approach, but front loading with this 50 basis point cut. Oh god, 10-year yield, stop going up. Sure is. Geez, what are your guys' average market rents in your area? Here in Las Vegas and Henderson, they're like $2,000 a month, I feel like the average monthly rent. Crazy. Crazy. Let's go. Love it. Oof. They're big words. These are big affirmations by Mr. Powell. Right, right. I do agree with that. Mhm. Yeah, inventories are still historically low. Great news. Optimism for us is a great thing. That's gonna be another super well, it already has been hot topic for the presidential campaign. I think 2025 for all of us is gonna be pretty solid, guys, to be honest with you. That's me. I man. Appreciate that, Mr. Powell. Appreciate that. Hey, can we please see the 10-year yield come back down below 3.7, please? This has nothing to do with him, by the way. A little tight, my friend, for too long. They're going to continue to stay high and increase. Yes. No more talking about rates and inflation and blah, blah, blah. Get back to the real world. Whoa, hipster. Ay, ay, ay. We got the 50, just move on. Oh, you think he's moved by the market. Okay. Calm down, buddy. Period. Boom. Say it again. Preach. Mr. J. Powell, y'all. Very important, actually. Cannot be dictated by the government. Manipulation. Party. I bet that guy spends a lot of money on hair product, y'all. I do as well. I would know. Uh-oh. US economy is strong overall, y'all. Right back at you. A lot of questions today. Guys, what's going on? If you're here, drop in the chat. Let me know how you feel about the 50 basis point cut that we got from the Fed today, how that affects you, whether you're currently a homeowner buying a house, in the market to buy a house, pre-approved. Make sure you drop in the chat where you're currently at with the 50 basis point Fed rate cut. Also, obviously, if you're here, make sure you're following, make sure you're subscribed if you're on YouTube. Make sure that you are part of the community because with me here, of course, as a broker owner of a mortgage company here in Las Vegas and Henderson, I'm here to educate you and partner alongside you and our community. Ooh, big. Okay, big talk right there. Yee. Those are extremely important words right there that most people won't recognize, but very important. Mr. Powell, love it. All right, guys, we did it. We got 50 basis points from the Fed. Jerome Powell confirming not just the actual basis points that is super duper important, right? Obviously, the basis point cut, 50 basis points is giving us a lot of breathing room here in, specifically with, how we're moving forward through 2024. But most importantly, hold on one sec. Let me stop screen sharing. There we go. Boom. Now, this is extremely important because, again, it's not just about the immediate basis point reduction that we're seeing to the Fed funds rate, right? Which is going to loosen up and reduce the immediate costs and interest rates for things that are attached to short term financing, home equity lines of credit, auto loans, student loans, credit cards, most importantly, where people are currently paying 24, 25% interest on these credit cards. These are the items that are immediately impacted by the short term Fed funds rate. Now, with long term, with mortgage interest rates, again, we're tied to the 10-year yield. Okay. 10-year yield is more forward looking. It's not tied directly to the federal funds rate. And as we see the 10-year yield push down and decrease, that's when we're going to see, of course, the continuation of mortgage interest rates continuing to cool. So let's make sure that we keep a close eye on the 10-year yield. But most importantly, in today's Fed rate announcement, Jerome Powell gave us guidance that they're confident in the economy, that the wages and jobs are not in a position to be too worried about, right? Unemployment is not spiking, it's not increasing in a point to where they're becoming uncomfortable, right? They like the area right now with 4% unemployment, where of course inflation is cooling down to. All of these things they seem to be very comfortable with, and they're trying to get ahead of and front loading this 50 basis point cut, moving for a total of 200 basis points coming by the end of next year, is where they gave us our guidance. So, again, super duper important. Forward looking guidance is all really that we care about in the mortgage and real estate world, where, again, if you're going to be in the market or you're currently in the market, right, we have a lot of positive outlook for the years ahead. Okay. So, what does that mean, guys? That means that the home prices and values, okay, as their increased demand happens, as more home buyers enter the market, and as more people are, trying to submit these offers and get them accepted, you're going to see more competition and increase to home prices. So make sure you're working with a local partner in your community, a mortgage expert, a real estate expert that has your back, that builds your experience from a foundation of knowledge, of education, of expertise. That way you understand the process, you're comfortable with the process, and you are, you put yourself in an affordable situation immediately, right? Being in today's mortgage world, right, where you're locking in a 30-year fixed rate mortgage for the next 30 years, when you're in that house, you know exactly what your principal and interest payment's going to be, what your interest rate's going to be, and what that payment will be that you have to afford for the next 30 years, unless interest rates come down. Okay. In the event once interest rates do come down and cool and decrease, right? That's when you have the opportunity and ability as the existing homeowner to refinance to the lower rate and payment. So again, it's a hedge against inflation. It's a hedge against, of course, rising rent costs. Obviously the interest rate on rent, of course, is 100%. Your money's not going anywhere. So make yourself a homeowner as soon as you're able. Okay, leave it up to the experts, the people that do what I do for a living on the mortgage side, the people in the real estate side that have your best interest and have your back and want to help you, of course, better your future, your financials, your, long-term longevity with your financials, right? Let the experts help you. So again, I appreciate each and every single one of you that spent the last hour and a half with me here, going through and watching the Fed announcement. Again, we have another 25 basis points expected to happen in November and December, and then another additional 100 basis points in 2025. So again, just the overall outlook on the economy is looking solid, guys. Very positive. Super happy with today's insights from Jerome Powell. Make sure, again, guys, who you partner with matters. Make sure you're working with the right people. Mario at Sienna Mortgage, your local mortgage experts here in Henderson, Las Vegas, Nevada. If you're here, make sure you subscribe, make sure you follow, make sure you join our community, where, of course, it is my job to serve you. Again, remember, guys, who you partner with matters. Hope you guys have a wonderful rest of your day. Mario with Sienna Mortgage.